There are significant opportunities for the reinsurance industry to grow in the public sector market. Over the last few years, we've seen a significant increase in weather volatility, and according to the majority of scientific opinion, this trend is set to continue. The impacts of the effects of climate change have caused stakeholders to reconsider how they approach climate resilience. Alongside this evolving threat, the protection gap continues to grow. At Carpenter, we see efforts to increase societal resilience to the impacts of climate change as a significant opportunity for the reinsurance industry. The industry has a collective expertise to assess, monitor and price risk, and then indeed to place it in the reinsurance market. Last year, over half of natural catastrophe disasters resulted from secondary perils such as wildfire and drought. And we see that the reinsurance industry is well placed to grow in this area, given its ability to provide customised solutions and products for the private sector, whether it be at a sovereign, state or municipal level. A number of factors are contributing to the global insurance gap. These include losses from risks considered to be uninsurable, low insurance penetration rates, as well as losses from risks that are emerging and unknown exposures. There are a couple of examples that I think are worth mentioning that illustrate the way in which the reinsurance industry can help bridge the protection gap. The first one is that as well as increasing the portion of insured versus uninsured losses, the insurance industry can assist in decreasing economic losses via public-private partnerships. This has worked incredibly well, for example, in the United Kingdom, where the government has invested in building flood defences, whilst the insurance industry has insured private property that is in areas exposed to high flood risk. The second example that I'd like to give is the way in which the insurance industry can support access to insurance for low-income communities that are exposed to high risk. The third example is that secondary perils such as wildfire and drought can be increasingly understood, monitored, priced and managed. Public sector reinsurance and risk management solutions can play a significant role in relieving the burden on taxpayers. Typically, governments will pick up the unbudgeted costs associated with responding to a disaster, and those may take the form of welfare payments, rebuilding infrastructure, emergency disaster relief, amongst other expenses. The burden on taxpayers and public finances can be reduced by providing private sector pre-financing options, and the reinsurance sector's ability to provide speedy claims response means that funds will speedily be sent to those that need it most.